How goes it all? Welcome back to Patterson L Properties. Hopefully, you guys having a great and exceptional day. Don't forget Patterson L Properties. We wholesale real estate in the DMV area, plus in Pennsylvania. So if you're a person that's in a distressed property situation, the majority of our business comes from tax sales and tax liens. It's just easier to bid for something, buy it, sell it as is, or flip it for profit and all that great stuff. But check us out. Website's in the description. Go from there. Do great 3 free things: like, share, and subscribe. And today, I'm just basically going to be doing something I've never really done on this channel, and really just talk about things that may help homeowners in 2023. Um, Potential homeowners, current homeowners, is something to take into consideration. Because one thing to take into consideration in 2023 is that we are not in a full recession as of yet, but we're definitely in minor recession, as I like to call it. I'm not an economist, but I'm just from what I've seen in the research that I've done. Job cuts are up, but the unemployment rate is fully as high as it was, aren't as fully as high as it was in 2007 and 8 timeframe. I remember I only had one issue with having a job during the recession from 2007. Yeah, I lost my job in 2012, but luckily I was only unemployed for 4 months. So, and I had to, I was one of those that had to take a job that paid half of what I used to get. So I don't think we're fully there yet, but it's looming. Those aspects are definitely there. Housing sales are down because of the outrageous home prices and interest rates. You have people you have home buyers who are just like, forget it, I'm just going to rent. I'm done. This is a ridiculous market to buy a house in, ridiculous market even to buy a car, and getting a car loan in today's market will essentially screw most consumers today. So let's go over a few things that could possibly help today's working people get through or profit during the 2023 recession. Defense wins games. Having a defensive strategy allows you to weather a recession, whether with less impact on your financial health. By reducing spending and increasing savings, you will have a better cushion if you lose your job or experience a reduction in hours. Also, be careful about changing jobs, especially one thing that's happened a lot in the Black community: last hire, first fire. Even today, seniority matters in a recession, which is another way to get recession proof. And that's one thing that I've learned. It's like if you do have a habit of jumping from job to job, then have a habit of having a side hustle, whether it's a skilled trade, whether you're doing food delivery, you're doing Uber, whatever have you. You always have to have economic backup plan in today's world, because I think it's always been like that, but you definitely have to have it in today's world, because especially in a quote unquote looming recession, or minor recession, as I like to call it. Number 2, count your chickens before they hatch. Recently, the Wall Street Journal noted that companies are rescinding job offers due to expectations of a recession. Some companies are laying off workers, or reducing their hiring. Until you start a new job, do not assume you have a job. Real talk. Number 3, cash is king. Many families increased savings during the pandemic, but are now enjoying travel, vacations, and making other large purchases that were delayed because of the pandemic. In addition to inflation, which includes higher prices for gas, food, housing, everything's overpriced now, has increased. And according to Fortune, cash is king during a recession. It not only allows you to have savings cushions, but it may also reduce your risk during a recession. And I always believe cash is king, regardless, because no matter how many investments you're going to need cash in case something happens, or you're definitely going to need access to capital and other various aspects all at the same time. That's why I believe in having a significant amount of credit cards, because you just never know. All right. The more credit cards you can get means the more access to capital you can get, meaning that doesn't mean you have to have, use the credit cards like I do for just simple things like groceries, gas, whatever. Get your points, get your cashback rewards, get your airline miles, which I love because I love to travel, and go from there. But just utilize it for necessities and pay it off. Work on your credit score, and then when something big happens, like a medical issue, 1 or 2, if you're a homeowner, something's always going to break down. And then another thing to take into consideration: if you have a car, you definitely want to utilize credit cards when something happens to your car, because something will always happen to your car, because like a home always needs maintenance done, especially because you're utilizing it. So that's just something to take into consideration. All right. Number 4, better health, better wealth. I love that. The COVID-19 pandemic taught us the importance of health and wellness. Many of us missed our annual physical due to the pandemic. I've been guilty of this myself. I know I need to go to the dentist soon. I haven't been to the dentist in years, especially I stopped going before. And when I was going to go, then the pandemic happened. So it's definitely time for me to get another cleaning done this year. But anyways, yeah, it's like many of us missed our annual physical due to the pandemic. Not good. Many of us experienced mental health challenges as we navigated through the pandemic. Completely understandable. Take the time now to catch up on your health and well-being in case the recession impacts your access to healthcare. A lot of times when you lose your job, you lose your health insurance. And then another thing to take into consideration is that because even me, I remember I had a back issue and I had to get blood work done, and they were talking about my cholesterol. So I've done a great job of improving my diet, getting rid of a lot of the carbs, mostly drinking water and tea and things of that nature. So your health is your wealth, regardless of the situation. You can be a billionaire, but if your health is terrible, what good is it? All right, number 5, the importance of the long game. Most investors will tell you to avoid trying to buy at the bottom of the market or sell at the top to gain short-term financial advantages. Instead, focus on the long game or long-term financial goals. Yes, mortgage rates have increased, but it still may make sense to purchase a home if you plan on living there for over 5 years. Home loan rates are still relatively low. But it's not. They're these relatively low in certain aspects, depending on how you look at it. However, prices are still overpriced, so that's why a lot of people just like they don't see the bottom falling out like 2008 and 7 time frame, but they know that eventually sellers are just going to have to come to the realization and the common sense conclusion that you are going to have to lower your price if you really want to get rid of your home. So it's something to take into consideration. Number 6, stay informed. These are challenging times, so it's important to stay informed. There are many public policy changes beyond the Federal Reserve's increase of interest rates that can impact your wallet, including student loan debt forgiveness. Forbes provides great information on how you can qualify for student loan forgiveness in the recent article, how to get $8.1 billion in student loan debt, $8.1 billion in student loan forgiveness. And a lot of people have gotten their student loan forgiveness letters. And I'm happy for them, because in the hope they get that debt off of their back, and then they can move on to other things in life, especially becoming a homeowner. D, rent payment history can help your mortgage application. Fannie Mae has a new program that allows rent payment history to be used to qualify people for a home loan if you are a first-time home buyer and pay your rent on time. Here's a great money article. The article titled, look this up on Google, paying your rent on time can now help you qualify for a mortgage. And it just makes sense because so many mortgage applications, even before the interest rates basically went up and went crazy. So many people were not qualifying to buy a home based on the fact that they didn't have enough credit. Because a lot of people who actually are great renters, and they pay the rent on time, they're good tenants and things of that nature, but they don't have a bunch of credit cards, so they don't even utilize credit a lot, or they barely utilize credit at all, because a lot of people are still scared of credit in this day and age, or they had a very bad experience with it because they weren't responsible enough to deal with it at a younger age. Because, once you turn 18, credit card companies start sending them out. And me, I looked at credit as evil. So luckily, I never got a credit card until I was like 24, 25. And when I was more responsible to you, or maybe it wasn't even until I was 26, 27, when I was going to get my first home, it's like, you don't have enough credit. They said, you have credit, but I only had one credit card. It's like, you need more credit cards. So it's just, it's the catch. And I'm like, it's not like I did anything illegal, but it's like, you don't have enough credit. And back then I was still dealing a lot in cash. I wasn't even utilizing a debit card like that. So I'm taking into consideration. So hopefully these things will help you out and others during these crazy times, family. And 2023 is just, for me, it's hey, do your best to increase your skill sets, your worthiness, do your best to increase your savings. And then after that, if you can, do your best to increase your assets. On that note, do the great three things, like, share, and subscribe. Have a great day. As I always say, make money moves, or you're gonna live like a fool. Take care.